Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading and take a look at hotspots in the markets for today, Friday, June 10th, CPI Day. My name is Todd Rich. I'm with Nadex. With me, Brian Caprice from Keep Trading Simple. CPI numbers just came in. We got a glimpse at what is going on with inflation, and it is not pretty. Everything came in much worse than expected. The market's initial reaction, equities getting crushed, the US dollar seeing some fairly significant strength, pretty much following through what we saw yesterday toward the close, just extending all of that. So lots of volatility. We are going to go through all of that. Before we jump over to take a look at the numbers, the headline news, and the charts, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. And just a very quick peek so you can actually see the numbers. If we just take a look at the year numbers and we take a look at inflation rate year over year, 8.6%. We're going to be seeing that number in the news a lot. That is the highest inflation we've had in 40 years. You got to go back to 1981 to see inflation spiking like that. The core inflation rate at 6%. Both of those numbers coming in higher than the forecasts. If you take a look at the month over month numbers, we were forecasting to have month over month inflation rate up 0.7%, up from 0.3. It came in a whole percent higher, and core came in higher than the 0.5%. Really not pretty. The immediate reaction, equities getting smoked. And we saw that yesterday, like people kind of were going into risk off, or they knew. Yesterday, towards the end of the day, a lot of selling in equities. And then, boom, that number came out. We were flat, and then we just dropped. Uh, and then, of course, the dollar also taking off. I mean, here you can see the euro dollar extending. Heading, I don't know, are we going to get to parity at some point? But the US dollar seeing massive strength across the board. All right, Brian, I'm going to flip it over to you, and I'm going to let you really kind of dive into it, take a look at what we've got. But then, yeah, the charts are going to be kind of fun because we're having huge volatility today.
Yeah. There's there's harm to it. I mean, we've been mentioning it all week that we expected it to come in like this. So I'm not surprised at all. I'd wait. We'll get that 40-year high. I've said it all week. I've said it for the last 2 weeks. Again, we had 1 month where they said it was leveling off, but this just shows you it's accelerating. So there's really not that much to say about it. I think that the biggest problem in here that we're seeing right now, or the biggest kind of worry spot, is definitely the core, because again, that's the one that Bernard has been, basically like, hey, look, it's working. The core, that's what matters. We don't care about the CPI. I mean, and CPI is not the actual preferred, but the markets are responding exactly how they should. The question is, on a Friday, are we going to be able to trade much more on it? And there's probably some more negativity with it, but unfortunately, a lot of this is over the last 24 hours. We always joke about how, and it's not even joke, we talk about how people have the data ahead of time. Seeing the move yesterday, hearing the White House come out last night to kind of warn us what this was going to be. I was driving back from the boys' practice last night at 8 o'clock, and they were talking about how the White House was about to go on and basically kind of foreshadow and kind of warn people that today's data could potentially be worse. So if the White House is about to do that, how many different people knew what the CPI data was before the actual data release? Lots. And again,
Right.
that's why we saw the market crash yesterday, and that's why we're seeing it crash today. And the reality is, the Fed has completely just botched this entire thing. The White House saying that the economy is in a great position. I don't know, again, what they're smoking, what they're eating, what they're drinking, but they have no touch with what reality is. This number is an absolutely monstrous number. It was supposed to be over double. It's over 3 times higher on a month-to-month basis after 2 interest rate rises. Jamie Dimon, right 100% again. Bullard, right in every single one of his comments. And now we're to the big point that, remember the comments we heard a couple weeks ago about a couple different Fed presidents talking about how we may have to send the economy into a recession to kind of, crush what we need to crush? Good old Yellen over here. There's nothing to suggest that a recession's in the works.
Well, it will be when
Yeah.
you've got inflation at 10%. it will
Yeah.
be a recession. So
Yeah.
it will. So, and we're not that far away.
Hmm.
We are not that far away.
Yeah, and Yellen says that she believes that there's a path this that entails, we'll go to a soft landing. So, yeah, I
Yeah.
don't know.
Well,
I'm not
there goes
again.
the soft landing just ended.
Well, this was only yeah. Well, this was only 16 hours ago that she said this. I would be highly shocked if she didn't already know what the
Have
data
the
was. As the
data.
treasury,
Yeah.
yeah, and these are the comments again. As the Treasury Secretary making these comments, it just shows you that we got problems, major problems. And then then we start doing the January 6th, 3 weeks of the Jerry Springer trial. So yeah, all I got to say is for the markets today, again, a feel good Friday is probably not going to happen. Seeing some of the numbers in currencies, they are all out of a standard daily ATR. The pound yen actually is not, again, the pound yen is a proxy with the yen involved in there. It's only down 160, so it's not down any I mean, again, earlier this week we saw this one down 255. So 157 is kind of a normal one, but looking at things like the dollar CAD up 177. It's kind of almost twice a double. It's like double a daily ATR there. That's an absolutely monstrous number out there. The pound dollar being down 120. It's about an ATR down, but that's in the last 24 hours. It's been really kind of deteriorating. And the euro dollar down 200. That's a monstrous move. And what's that coming on the top of? You may say, well, okay, wow. I mean, getting things like this out of the ECB, right? Inflation is unacceptably high. Yep, 40-year high. That's pretty bad. Gradual is not slow. Okay, does that mean that's kind of what we're doing right now? They think they're doing. They're going to hit 2%. Fiscal policy will need to remain supportive. ECB saying what? Supportive? How are we going to raise and be supportive? That's the same thing that got us into the problems we're in right now. And monetary policy isn't the only game in town. Well, yes, driving the economy into a recession is different than basically the monetary policy. And what he's saying is basically the war. But again, as the war is existing, there's no end in sight. You still have to kind of progress and trudge forward. The life is not ended. So, very, very interesting kind of kind of news we got this morning. Now, all the news in Canada, great. I mean, you see this up dollar CAD up 180. It could have absolutely been up even worse. CAD, their unemployment rate actually dropped some, and they actually hired about 10,000, about 25% more than what they actually had. So there's actually great CAD news out there too. But unfortunately, this thing it is just literally telegraphing that hey, that 0.5, and then waiting and seeing may turn into a 0.75, 0.5 at this point because it's getting worse. And again, any of the charts that we look at, I mean, even from yesterday, I mean, yesterday morning, dollar CAD straight up. Look at the euro dollar chart. It's kind of the same thing. I mean, it collapsed yesterday, and then, funny enough, we talked about a level that we had seen. It didn't actually push through it. It touched it. Well, guess what it did? It Harry Potter right off that same level, and then ended up dropping another 109 pips from that time too. So, I mean, we've had 2 daily ATRs in 24 hours straight to the downside, and we are approaching that magical 105 number. So we've seen weakness. Where is this one going to end? Looking at this, I would probably say, and again, I think euro pound is a great way to figure out how to play this in the currency realm. We took that bounce yesterday off of the 85.84. We went all the way down, and we talked about how 85 was going to be a very important level. You see how this is really kind of stuck in it? And whenever we see this much movement this quick, you're always thinking reversal. You're thinking parabolic move. It's going to come down. It's going to find buyers. And again, it did. If I extend this across, you can see it did. It ran right into the other side of things, and it's kind of based around now. But it's holding. It's not giving us a lot of kind of one way or the other strength. But right now, the more recent trend has been pound strength. So looking at how you can potentially play this today, you could take the pound, which is obviously accelerating. But most likely, again, we've crashed through some targets down here. We got a little bit more room to run, but I think strength comes into this one probably a bit sooner. Well, we don't have much here, so we have a level much farther down in the pound, and I would say that this is probably more the pound target for today. It's only going to require about another 50 pips. That's nothing for the pound dollar. I think you can get that, but if you're looking for potential reversals, I would say probably down here at one. This would be a target first. A 123.31 would be kind of the target first, but I actually like this as a potential reversal level for Monday, or I'm sorry, Sunday night. Because remember, the pound's dealing with inflation. They're dealing with over 9%. We're dealing with 8%. The pound is ahead. They are going to have to do something. It's just, it's kind of like right now, if they're going to a recession, we're going to a recession, then it equals everything. So I would expect some type of retracement. There will be profit taking, but you can see this has been deteriorating. We've had some pullbacks in this. If we wanted to extend this now, you can see that the 50 is also kind of popping up. kind of near level, but I kind of like the 61.8 level. If we get any type of retracement back up, let me remove some of these. I'll take this off. I'll take this off. I'll take this, even though this based right in there. I'm going to say right now, the next level, and again, this is a 61.8 pullback, will be right around that the 125 mark. Again, 125 is a big psychological number as well, especially with the quarter theory. But 125.05 up to 125.19. So a little 15 pip zone in the dollar US. That's probably a decent level to pull back to. Also, you can see this old level up top. It did provide some kind of like a little bit of resistance here coming through. It did slice through, and right now that's at the 23.6. So again, it is kind of lining up as well. If we have any type of reversal level, this could also be an area where we're looking to get short. So I think there's probably a bit more, but if we can get all the way down, we bounce. Euro dollar, I'd probably stay away from this one a little bit more, but 105 is the magic number for me. We're only 34 pips from it. I'm pretty sure it hits it within the first half hour today. But I do think we will have a retracement, and if that retracement comes in, it could be right around 930. We may see a pullback. The retail trader hasn't gotten an opportunity to kind of trade this yet. When they step in at 930, say, okay, trading time, the markets are open. As they're all trying to short it, the profit taking will occur. So I do expect some type of a pullback today. 105 is about where I'd look at it. Now, Aussie Dollar, you can see Aussie Dollar did pull back, interesting enough. And you can see this one kind of push its way down. We actually talked yesterday morning. We were sitting right in this level. There was a kind of a binary in there that we were flirting with. But you can see, came through, crashed in, hit a level, pulled right back up, and obviously monstrous candle to the downside. So at this point, again, the Harry Potter from yesterday that we had mentioned, the pullback, it's out. Right now, there was another level down here, but I think that the Aussie probably finds a bottom in here. There's a couple different areas of buying here, and here. So I would say look for a potential bounce off of that one. And again, this one gets pulled through with gold. Gold, interesting enough, that's the gold candle. You may say, well, why is it green right now? Well, because everybody sees it and says they're going to raise interest rates, but we've heard nothing yet. And everybody trying to sell it, there has to be someone on the other side of the trade. So what they're saying is, yeah, there's a lot more inflation than what we expected. Could there be an inflation play in this one? And that's why you're seeing gold go back up again. Because until we get any type of word from the Fed, they're just going to keep going. And Yellen's like, yeah, we're a soft landing. We don't have to do nothing. This is all good. So again, that's technically a pro environment. So if we start to see some Fed presidents talking, then yes, gold will continue to push back down again. Again, we talked about being short this, from yesterday. You can see it already heading back down. And really, in reality, all it did was pulled back and grabbed this old level. So silver, kind of the same thing. And silver more or less found a bottom for two reasons. One, there's a lot more, inflation than they had expected. The Fed is basically saying, hey, everything's great. We're good. We're following our path. Until we see a headline, again, there's no reason to believe that they're going to kind of change trajectory. So, unfortunately, the VIX, the VIX really kind of went crazy, and
VIX is going to spike, especially with the markets plummeting. Yeah, and we're going lower. I mean, man, we'll get over the equity charts in a second, but they just
we're going to do those next. But I mean, you can see this monstrous VIX candle, and again, the fear index with this, and they telegraphed it last night, but I mean, magically at 2:30 in the afternoon, when you see the VIX go, whoa, CPI is next, and then skyrocket, you knew it was coming. And we kind of, all week we've been talking about expected to come in higher. And funny enough, look at this. It moved and then literally hit the end of the market and then just paused. The European session did nothing with it, didn't even pull back. It's like, we're not going higher. Nobody believed that it was going to be a positive number today. And when it came out, it just crashed. And we are below 4,000 now, so that's going to be something they're going to talk about. And where price is right now, we've had a couple of these trades. This is an old one here, an old short. Let's remove this and see where their buyers at. I'd say there is a little small level right here. Could be bounce, and again, a little bit of a confirmation bounce off of that. Could that be an area where we have some tricks later on? Sure. It looks like we got another kind of short, kind of Harry Potter down there as well. Let's bring this across and see kind of where these are at. So looks like we got a level sitting right here at 39.28, and then again we got a Harry Potter break of 38.72. So I'm going to paint this as green. We got about 30 minutes. If we can get down and start basing in here, this could actually be an opportunity to take it long. Overall, on a fundamental basis, this is 100% negative today. There is absolutely zero positive to talk about. Inflation is still out of control. We know it's earlier this week. We've heard it's branching out into many different sectors. The only response at this point is to drive us into a recession, to kill the demand, to stop the inflation. I'd say at this point, though, so many people are going to try to short this at the open. That could give it an opportunity to take a very small bounce up to stop all those people out before we have a continued push down. Um, Question is, how big of a trap are they going to set today? Because a lot of the movement has already happened and people were super negative with it. Again, it is a parabolic move down. We need to find a bottom down here, but I wouldn't be surprised if there's a trap and we see kind of an opening push or maybe even like a 1030 push down and then it kind of closes back up again. On a fundamental reason, it should literally be down here at 38.40 for the day. But there will be a trap because so many retail traders will see this, and every news program is going to talk about it. I think this one has the potential for some craziness. This looks exactly the same. Came down, stopped, based, and it's just dropped. NQ, let's see. Problem with NQ is we're sitting right here right now. There was a small area, and again, it's kind of similar. You see this big movement price, and then there's an area where the last time price was here, it based, it hit it, and it did have a nice push off of it. So if we're going to see kind of a trap reversal, I don't know that it comes in here, but I would say that potentially coming in at 11,919. It is a small level. It wasn't the cleanest of levels. It may just get sliced right through because the data justifies it being sliced through. But if you're looking for a trap, that could be a potential area where this comes down and then again could take a bounce off of it. YM exactly the same. Yeah, YM is pulling up right now, but I think this is the profit taking. You see this big of a push that quick. I mean, this one moved what in one candle, 464 points. So yeah, 464 points in 30 minutes, and yeah, people are taking profit because everybody and their brother pretty much knew to be short this one last night. And again, this is why I talk about it. Everyone's like, "Where's the trade now?" It's like, well, the trade was 15 minutes ago or 30 minutes ago. So big push. Where can this one turn? This one also has some areas. Not concerned about this one. Probably, if there's going to be any type of reversal, 31,347 or 31,350. There is a Harry Potter. If we can get all the way down here, God, how much more would that be? If this drops another 600, actually, I don't think we could. I don't think we could actually drop that far. The next setup we have is probably the next short setup is probably Monday because if it's already down 419, this would add another 671. I think that would trip all the circuit breakers. They kind of put a bit of a trading halt in there. So I don't think we can get that far down, but potentially I don't even know if we can get to this level here. So let me actually run.
You gotta go. You're having to go so far back to find some of those levels.
Yeah, well, it's actually not that far back. It's only May, the end of May 23rd, May 22nd. But it's the problem is the range because eventually circuit breakers will kick in because the market has dropped so much.
Right.
In all honesty, my belief is today, based off of that news, the fact that we've done 2 interest rate rises and their policy is like, yeah, we're going to wait and see. It's going to be a soft landing. This is all good.
They're going to have to get much more aggressive, aren't they?
To me, I feel like today is a justified day to hit a circuit breaker, one of those little warning circuit breakers. Because I think it is a very, very serious release. It's a huge increase in 1 month, especially after 2 months of 2 raises in a row, and no response already. So there's going to be a response. I'd say right now the 23.6 is going to probably be a big level that people look like it, and it may actually be even on a smaller basis. They may take it from just prior to news. You can see it is pulling back up again, but there will be people, and actually let me drop this down to a 5. Right?
This is that pullback where you're looking to get those guys, the profit taking, and bring in those other folks, and then they're going to slam it in their face.
Yeah, exactly. And again, right now, if you look to see the black line, it's the 50. I'm on a 5-minute chart. You can see that there is definitely, again, there's a bit of the first pullback was there and a second push down. There may actually be a bunch more shorts. And again, if we come up to 31,974 at the open, that could be an opportunity to take this one short in the YM. Russell should get absolutely just hammered today. I think we get 1,800 today in the Russell. You're seeing it's doing the same type of a pullback. Let's run fibs on this one. And yeah, it's the same thing. Look at that. The new bottom right there is where I don't even know if I can go any lower to see a decent level now. It was too quick of a pop. But you can see the 50% has confirmed sellers in there. So there could potentially be a level sitting right there, which happens to be, if this is the bottom, the 50% retracement, next 20 minutes, if we pull up, there could be a short sitting there right around 1836 on the way down to 18. But overall, I don't think it's going to be great. And again, crude oil, guess what? It didn't really have much of it's actually going up based off of that news. So yeah, natural gas down again, but crude oil, you're like, yeah, they're gonna raise interest rates. This is horrible. And yeah, crude oil starting to rally back up again towards that 22 mark. So I don't even need to go there. That's on the bigger chart. But
Yeah.
there you go. There was your pop down, and now it's starting to retrace again. And silver actually just turned green. So silver's turning green, and gold's on its way as well. So, like I said, absolutely horrible news to get. Absolutely zero surprise in getting the news this bad. So this is what we're talking about: is knowing your news releases, looking at your economic calendar every single day, figuring out how to set your trades up. Um, we talk about how to set these overnight trades. I think last night, if you had looked at the Nadex contracts, I don't think the volatility was there yet. We did see a big spike, and then there was a little bit more this morning. But we talk about short duration contracts for news. We talk about knockouts being in close proximity to these things. Again, obviously a lot of premium baked in, but these were absolutely monstrous moves. No matter what you look at,
Right.
every single one of these was absolutely huge, blowing through a million different binaries or even knockouts of these. You got to know your news releases. You got to know what's coming the next day. You got to look at the forecast. You don't have to be an economic genius, but these are very, very easy setups when these things are so telegraphed. And Nadex is literally the perfect product, being an option. Imagine being a futures trader, being long, saying, "Look at this, it pulled all the way down." I think that it's baked
Yeah.
in already, and
And
then
then
bam, you've just lost your
nothing.
account.
Yeah.
Yeah. So again, you got to take advantage of that limited risk with a predefined risk. Like is what is the correct term, I guess. A
Yeah.
predefined risk.
Yeah.
Yeah.
Predefined,
So,
predetermined,
but that's it. I'm off my
predetermined.
soapbox. You
All
got you
right.
back again.
All right. All right. Well, we're going to let you get ready for the trading day. The equity markets will open in 23 minutes. With that, any questions for Nadex, email us customerservice@nadex.com. Brian and I are also accessible. You can email Brian, ask him questions, support@keeptradingsimple.com. I am also available, todd.rich@nadex.com. And then really the number, I mean, there's just no other way around it. In fact, I'm going to put it up here again for anyone who kind of came in late. I think I still got this page opened up. We can just, I mean, you just look at it. You look at the year over year numbers, core inflation coming in at 6%. Annual inflation, this is the number you're going to see a lot of. This is what everyone's going to talk about in the news. Forecast to be at 8.3, holding steady. It came in at 8.6, not holding steady. And then the month over month numbers, it just off the charts. Inflation, it was previously last month, it was up 0.3%. We're expecting it to be a little bit higher month over month, but I mean, it just blew it out a whole interest rate higher. So we've got inflation. There's no question about it. The Fed's going to have its hand forced. They're going to have to do something, either jack up interest rates a whole lot faster. So we're going to see what we've got in store for uh, this summer and how they want to handle that. And then the other is, as Brian mentioned, put us into a recession. That will back down demand, and that will pull prices back down. So we did have a volatile morning. We are going to have an interesting trading day. Uh, Brian and I will be back on Monday. We will be back Monday. And until then, hopefully you can join us then. Enjoy the weekend and good luck in the markets. Thanks for joining, everyone.